Hey guys, Rhett here with Section 8 Real Estate Investing. Thanks for watching. If you're new to the channel, don't forget to subscribe, like this video, and leave your questions and comments. I'll get to all of them. Today I want to talk to you about something that happened in my real estate investing portfolio recently, as of the last 2 weeks. So I wanted to fill you guys in as I always do. I recently sold 10 of my Section 8 rental properties. I sold 10 of them from my portfolio in Birmingham, Alabama. I'll tell you why, and we'll get into a little bit of the numbers on it. As we talk about in some of our other videos, I always am talking about how great Section 8 real estate investing is, with a specific outlook on cash flow, which I absolutely love. But at some point, you have to realize that cash flow is great, but when people are willing to pay you a certain amount of money for those cash flowing assets, you can get a premium, and that's what I did. So I want to walk you through kind of why and how this happened. As you guys know, I started in 2017 in Section 8, started building my portfolio, and since 2017, things have changed a lot, right? And the popularity of Section 8 among investors has gone through the roof. Why? Well, 2020, the COVID pandemic really helped that. Unfortunately, with eviction moratoriums, courts being closed, you couldn't evict your tenants. There were states where governors said you didn't have to pay rent, right? A lot of straight cash renters stopped paying. A lot of investors didn't get paid, right? Investors who owned rentals got killed in 2020. But Section 8 kept paying, right? The US government kept printing money to pay me every single month, okay? I'm one of the only people I know with rental properties who got paid every single month, okay? And because of that, the value of Section 8 rental properties went through the roof in 2020. And when a premium was to be paid for rentals, I saw an opportunity. So obviously I'm not selling all of my portfolio, but I just sold 10 that I think were really strong investments that I think I could have gotten a high premium on, and I did. So I wanted to update you guys on that. And I just wanted to run through some of the numbers as I was running over them, just to show you guys why it's so valuable, right? For 3 years, I've cash flowed properties, right? I'm gonna focus specifically on these 10 that I sold, okay? These were 10 of some of the oldest ones I've owned, and we'll get into why I sold those as well. But let's kind of look at them briefly. So, 10 Section 8 rentals. These properties were located in Birmingham, Alabama, right? I still have property in Birmingham, but these 10 were the ones I kind of cherry picked to sell. My average acquisition cost on these were $34,974, right? I promise you I didn't sell them for that or anywhere close to that. The average rent on each one of these was $827.15, and the average hold on these was 2.8 years. So I've owned these for a while, right? It's pretty much since I got started. These were 10 of the first properties that I purchased. And the $827.15, that number is the number at the sale, right? This isn't the average rent since I purchased them in 2017. Now that's important to know because as every year goes on, I request yearly rental increases from HUD and the Section 8 Housing Authority. So as the market rent every year goes up, I like to stay up with the market rent. So every year I file an increase so that that number keeps going up and up and up and up, okay? So that's important to know. What else is important to know is when this is your average acquisition cost, right? And these two numbers are relative. You're making, multiply by 10, right? Per month, and over 2.8 years, right? You're making a nice chunk back on that original investment. And then you turn around and sell that investment for a large profit. You sell it as a turnkey. I say I sold these 10 at a premium. What do I mean by that? Well, I'll tell you. the average acquisition here is $34,974. Now, that's because some of these properties, like I've talked about in other videos on how to build a rental portfolio, I purchased these properties for very, very, very little amounts of money. Right, my first property I ever bought was for $13,000. Okay, obviously the cost of construction has gone through the roof, right? So what cost me $20,000 back in 2017 is costing me, you know, 40 now, roughly. Things are so expensive. So this number isn't super attainable right now in the Birmingham market, but being able to get in at this number and being able to sell for a premium, and again, this premium word, what does premium mean? It means I am selling an investment. I am selling a turnkey. I am basically selling you a finished product. That's what I mean by premium. I'm not buying foreclosed properties like how I built this. I bought foreclosed properties, renovated them all, put tenants in, set them up with property management, right? I'm doing all the hard work. Now an investor comes in and wants to pay me for all this hard work I've already put in. They just want this finished product, right? They want the property management company in place. They want the tenant, right, and a good history of paying rent. They want a home that's had very significant updates, you know, recently, right, within the last 3 years. So they want all the good, but they don't want to deal with all the hassle of the, you know, the finding the properties, going and do property walkthroughs, right, gutting the home, and finding the right contractors to do the work, and then dealing with putting tenants in, and then tenant needs, right, finding the right property management company. I've done all that, so I have the right to sell at a premium. Now, would I have sold if the demand for Section 8 hadn't gone through the roof? Absolutely not. And that's why I still have Section 8 properties, and plenty of them. But at some point, you have to realize that this is about making money, and cash flow is fantastic. But it's also nice to sell off some of your properties and get a really, really nice profit in return, to do other things with, right? To reinvest, to buy more properties. So I just want to update you guys on that a little bit, because when you're able to grow a portfolio and you're able to reap the benefits of cash flow for years and years and years, recoup your initial investment, and then sell your properties, right? What else is there, right? We talk in other videos about growing portfolio, pulling equity from that portfolio, buying more, right, with other people's money. And then you still are receiving cash flow, appreciation, and then you can still sell these things, right? There's still an asset that you own. I've come full circle on these 10 rentals, right? You talk about where they were purchased as foreclosed properties, built basically from the ground up with tenants, became Section 8 rentals, and then sold to another investor who I know will have an unbelievably nice time with these rentals. When it came to choosing these 10, I chose 10 of the most secure rentals. Now, what do I mean by that? I chose properties that had the least drama with tenants, that were the best tenants, that were the what I think are some of the nicest properties, that need the least amount of maintenance, that have not a lot of deferred maintenance, meaning maintenance that's coming, you know, new appliances, new ductwork, new HVAC units, a lot of times new plumbing, new roofs. They were held all by the same property management company that I really like and really trust. So, and obviously every investor wants, right, the highest amount of average monthly rent. So I was able to kind of pick and choose to get to a number that was very respectable, and it worked out. So I'm telling you guys this obviously because there is an end, right? We're looking towards an end. The cash flow, you can cash flow this for the rest of your life. But if you need to sell, if you want to sell, right, we're trying to sell high always. So if you reach a limit to where you say, wow, I can get this amount of money for these rental properties, why not? Right? Why not? So these 10 were great. They were some of the first couple that I owned that had some sentimental value to them, and they are now in the hands of a new investor, and I think that that's great. I think that they are in good hands, and they were great investments for me, and I know they'll be great for the new investor who purchased them. It's a nice way to start a portfolio, right? We talk a lot about on this channel building portfolios from 1 to 2 to 3 to 5 to 7 to 10 and so on and so forth. If you guys have the capital, it's not bad if you find the right deal to just buy 10 at a time, right? It's you can do all the same stuff we talk about, right? You buy 10, pull your equity. If you buy them in cash, you're receiving cash flow. You're making, a good percentage on your cash flow via the spread of your cash flow to your loan. A lot of options, and then at the end of the day, you own 10 rental properties that you know are going to pay you rent, even if the unimaginable happens. So guys, just want to update you on that and tell you a little bit about what was going on. I'm not going to disclose the sale price. That is between me and the investor that purchased it. So guys, questions, comments, leave them in the comments below. I will get to every single one of them, and as always, thanks for watching.